headlines are loud, the noise is deafening. Trump tariffs, volatility, fear, global headlines. But what do the people who actually manage real money do every single cycle? What are they saying behind closed doors? I put 3 of the sharpest market experts in one room, and what came out of this conversation is what every investor needs to hear right now. So I sat down with some of the top market experts, and what struck me immediately was how aligned they were on certain things and how nuanced they were about everything else. This is not gloom and doom. This is not blind optimism either. This is grounded, experienced thinking on where India's markets stand today and where they are headed. The first thing that all of them agreed upon immediately is stop reacting to the Trump tweets. Every time a new trade headline or a tweet drops, investors panic. Markets dip, social media catches fire, and the people who sell in that moment, they lock in their losses right before recovery. Yes, macros have been impacted. Yes, India has not been immune, but our fundamentals are strong, and that is consistent. Serious investors who have lived through 2008, through COVID, through multiple cycles say this. Now, on FII flows, the panel was very clear. Foreign institutional investors will come back. The question is timing, it's not direction. And when it comes to growth, the consensus was that single-digit to low double-digit returns are a realistic expectation. Not the heady numbers of a bull run, but very solid compounding growth for those who are going to stay disciplined. Managing expectations right now is one of the most important things an investor can do. And here's what they had to say when it comes to building a resilient portfolio. And here's what you should include. And I'm going to give you this clearly because it is genuinely actionable. Here are some of the themes that are the most exciting part of the conversation. And the panel actually landed on this set of themes that they believe are going to drive outsized returns over the next several years. Consumption and discretionary. India's middle class is expanding. SIPs. Investing through volatility is how the ordinary investors are building extraordinary wealth over time. Passive AIFs. Low cost, broad exposure with long-term performance. And global investing. India is strong, but diversification is non-negotiable. Even REITs. This exposure without the illiquidity in real estate is important. And be selective. Equity markets need to be selective, theme-driven, not index-hugging. This is still early innings for some of deep tech in India. The infrastructure, though, is catching up to the ambition. Capital markets as a theme. Because India's financial system is maturing and a lot of businesses sit in the center of that, they are enormously well positioned. Another theme, electrification of India. This is one of the biggest structural themes of the decade. EVs, grid infrastructure, renewable energy, once in a generation transition is happening, and underpinning all of this is the confident expectation that India will double its GDP, not eventually, but within a time horizon that every investor should be thinking about quite actively. And here was the panel's final, perhaps the most powerful point about people, not sectors. The Indian middle class is entering a golden moment. Rising income, rising aspiration, rising access to financial products that previous generations have never had, and the businesses that serve this segment well, that understand them, that earn their trust, grow with them, those are the businesses that will define the next decade. So tell me, what are the themes that you're most excited about in India's market right now? I'm going to read every comment, and I hope that this video gave you some clarity. Do share this with someone who's anxious about their portfolio. Please subscribe to my YouTube channel. I'll see you next time.